I have 3 stocks on my watch list that I want to share with you guys today. 2 of these I have never mentioned on my channel before. I'm going to share why these made my watch list, but also why I'm hesitant on buying them. That's why it's a watch list, because there might be a price point I'm looking at before I consider buying. So before we dive into those 3 stocks, I want to share my portfolio and its performance. I'm in the green a little over 20%. That's pretty solid. We see REITs have been hit hard, but I have some strong contenders in technology like Microsoft and Amazon that keep my portfolio well into the green. If you have any questions on this, please let me know. I'm transparent and share this with every single video. Okay, my first stock on my watch list that I want to share is a Mediterranean restaurant chain called Cava. This company is geared more towards healthy eating on the go, aka fast food restaurant, a healthy one at that point. So their mission is to bring heart, health, and humanity to food. It says, "We believe in serving delicious food that helps more people eat well and live well, taking care of the people and things that feed us, the earth, farmers, purveyors, and team members. Food as a unifier for a more diverse yet inclusive world where all are welcome." That sounds nice. Again, their food follows a Mediterranean diet and consists of bowls with lots of vegetables, as you can see here. Then they have pitas. They look like wraps, and they have chicken and lamb in them, for example. They also offer a kids meal. They also have unique drinks and also things like water, carbonated water, things like that. They have sides like pita chips and hummus, which I'm always down for, as well as a few desserts. You have to have desserts if you want to bring in customers. People love their sweet treats. So Cava offers also catering and sells some of its products in grocery stores like Whole Foods. They also have an app where you can earn rewards and order food for pickup or delivery. Cava currently operates 309 stores across the US, mainly in the southern and eastern part of the country. They have no international locations, and Cava wants to open another 50 stores this year in 2024. They just reported earnings and they were strong, which I will share in a minute. If we look at its stock chart, they did IPO just a year and a half ago, so since then they're up 35%. That is really good performance. Financially and physically, this company is accelerating quick. It just IPO'd in June of 2023, about a year and a half ago, so there is not much history to look into, so I'm going to share the highlights from their recent earnings. Now, at the top is for just the fourth quarter, the revenue grew a massive 52.5%. They also opened 19 restaurants within that time frame. They also had restaurant sales growth of 11.4%. That is really good. And their restaurant level profit margin came in at 22.4%. Pretty darn solid. Now, the fiscal year 2023 highlights. So for the whole year, the revenue grew basically 60%. That is fast revenue growth. And they opened 72 restaurants. Their restaurant sales growth came in at 17.9%, very strong, and the restaurant level profit margin came in at 24.8%. Now, their net income came in at $13.3 million compared to a net loss of $59 million in the prior year. So they're really turning things around and becoming profitable. Their adjusted EBITDA, which does show profitability, came in at $73.8 million compared to $12.6 million in the prior year. So why it made my watch list and sparked my interest as a possible investment someday? Well, one, they're geared towards healthy eating, which I think is a trend that will grow. They have an app and rewards program which creates customer loyalty. If they grow their app user base, that will be very beneficial for future growth, creating repeat customers. Starbucks is an example of a successful app that has created loyal customers. So if they can do that, that will be fantastic. They offer convenience, and convenience always wins in my book. Who has the time to make healthy meals these days, week after week after week? This will be an option for those, and I think they'll take it. Then another reason why this is on my watch list is I think there is the possibility of international expansion. Just think of Starbucks, other companies like Chipotle, Burger King, McDonald's. I mean, these companies that become global brands, they have really done extremely well with their stock. So now the reason on why I'm hesitant on buying Cava, I look at Chipotle, McDonald's, and other successful companies, and they offer food that is highly sought after. I'm not sure the health food category is one that will catch on like Chipotle. Granted, they are considered healthier they are still serving a savory burrito that people across all backgrounds love to eat. A bowl full of veggies or a wrapped pita just does not have the same ring to it as a burger or a burrito. I also think groups of friends or coworkers are less likely to go to a Cava than a Chipotle or burger joint. Groups just seem to always be pushed towards the more unhealthier option, at least that is what I see in my experience. So it's the popularity I worry about. Not sure it will catch on quite like others, but with that said, I can still see it being successful and popular, just not as much as other chains. So I'm going to keep on monitoring the stock, and maybe it will be in my portfolio someday, as I like the idea of the convenience it offers for a healthy option. It is still in its infancy as a company and therefore could have years and years of rapid expansion and growth. Now, a stock price target for this is about 60 bucks. It is right now about $59, so very little upside according to analysts. So I will be looking for any significant dips in its stock price, and then we'll make a decision. But with a PE of 280, it's priced high for massive growth. Overall, I like this company and its potential, and that's why it made my watch list. Now on to my second stock on my watch list that I want to share is a household brand you may never thought of as an investment, but that is the WD-40 company. Yes, their ticker symbol is WDFC. So WD-40. This was originally the Rocket Chemical Company, and it's an American manufacturer of household and multi-use products, including its signature brand, WD-40. I mean, who does not recognize this can? As well as 3-in-1 oil, Lava, which I've used some soap that was Lava, so I'm sure that's the same brand, Spot Shot, X14, Carpet Fresh, GT85, 1001, Soul Bowl, 2000 Flushes, and Novak. And it's based in San Diego, California, a place I'd love to live if you didn't have to be a multimillionaire just to make ends meet. All right, so some things about this company. They have a top secret formula, and these are some really cool points that I'm going to share right now. So the formula for WD-40 multi-use product is a trade secret so protected the company never even filed for a patent. In fact, only a single person knows every exact ingredient that goes into the famous formula. Hopefully they are really protecting this person. They're also a global company with just over 600 employees who live and work in more than 15 different countries, and you can find their products in over 176 countries and territories around the world. And it has over 2,000 documented uses. One of the most memorable, a bus driver in Asia once used WD-40 multi-use product to remove a python from the undercarriage of his bus. So if you have any python issues, you might want to get some WD-40. And then when it comes to distribution, it says our distribution network includes 62 unique trade channels, including hardware stores, automotive stores, grocery stores, sporting goods stores, drug stores, plumbing supply stores, and many more. Also, they really pride themselves in using the safest ingredients possible. So if we look at their balance sheet, and this is comparing the most current quarter versus the prior quarter that they released their earnings on, we'll see cash is increasing, total assets went down a little bit, but liabilities went down more, and most importantly, that long-term debt went down pretty significantly. So the thing I like to see here is that their total assets are about twice the total liabilities. This is a healthy balance sheet. When it comes to their income statement, this is comparing the 3 months ended November 30th of this year versus last year, and it shows sales grew healthily, therefore gross profit also grew healthily, and total operating expenses did grow, but at a slower pace, therefore creating a net income situation of growth from the same quarter last year to the same quarter this year. So overall, pretty good income statement. And then we move to the cash flows. Now the one thing I want to share here is I want to get to that free cash flow activity because that is what is so important. So we take net cash provided by operating activities, you subtract out purchases of property and equipment, and if you just kind of look at the two different comparing columns, you'll see that it grew massively from one year to the next. So then if we take this out and look at things over an 8-year period, we'll see here that revenue has been pretty much a sturdy grower over that last 8 years. And then we look at their long-term debt, which has kind of remained flat, so that's pretty impressive. And then if we look at their free cash flows, we see overall they're going up with a dip in 2022. I bet you that is due to some type of merger or acquisition. Then if we look at their stock chart, we'll see from 2021 to 2023, this stock went down tremendously, but it has started to recover over the last year. And that is where I want to share why I put this on my watch list. First, WD-40 is an established global company with solid brands that I feel will be go-to products for decades to come in the do-it-yourself and professional category. This is important in an economy where individuals will choose to save money and fix or clean something themselves instead of hire a professional. But the good thing is professionals also use these products. WD-40 has solid financials that have been improving for some time now, and I believe that trend will continue. It seems like management has gotten on the right path and they're continuing strong down that path. Also, WD-40's products can be sold in diverse locations from a hardware store to a grocery store and provide the company flexibility to expand beyond areas other brands are limited to. Also, WD-40 has a vast and secure distribution network, and that's very important with a company like this. So overall, I feel this is a solid company with a financial position to innovate, grow, and provide value to shareholders. Now the reason why I'm hesitant on buying. WD-40 does not have products that many consumers buy on a regular basis. In fact, I don't remember the last time I bought WD-40, as the can I last bought barely gets used, but I do have it and I bet you do too. We just don't buy it but every few years. So repeat revenue from customers is low compared to other companies, and I don't like that. Also, do-it-yourselfers are becoming less and less with each generation, so this company will have to rely more on the professional sales side of things in the future, so this could be a risk. Now, price target wise, they have a price target of $313. Stock is now about $268, so that's providing a 16.62% upside potential, so pretty healthy. So it's a stable stock with upside potential, but a risk of underperforming also if they cannot grow their sales and repeat customers in the way other companies can. So I would say this is more of a safe bet with the potential to provide solid returns over the next 5 years. This would be for me a 5-year or less play, not a 5-year or more play. I would have to reevaluate at that point, but it's one that sparked my interest and why it made my watch list. Now on to my third and final stock on my watch list that I want to share. It's a brand we all know and love, and that is Hersheys. Now I don't need to do a deep dive into this one's background. I've done a few videos on this company, but a few highlights about this company are, first, its brands. It owns iconic, popular brands that are recognized around the world. And I circled some here that I personally like Kit Kat, York, Reese's Cups, Skinny Popcorn. In fact, I like any type of popcorn. But let me know which ones you like out of their brand offerings. I'd be very interested to hear that. So if we look at some of their financials, we'll see that their revenue has been in a sturdy upclimb over the last 8 years, but their long-term debt is also increasing. It did go down last year, but it's been increasing with the most recent year that ended. And then if we look at their free cash flows, again, overall it's been going up, except this last year it's kind of downtrended. And that's led to what I believe has been the downtrend in this stock. It's had a huge dip, not even a dip, it's just gone down. It has yet to recover, but that's where I think the opportunity is. So I want to share why it made my watch list and sparked my interest as a possible investment someday. Hersheys is a strong brand with strong global presence. Sweets aren't going anywhere despite the weight loss meds that are hitting the market. Add to that Hersheys' expansion over the years into savory items like popcorn and pretzels. This is a company with solid offerings that consumers cannot resist. This stock is also offering an opportunity right now in undervalued territory due to its unusual recent drop in stock price. So now the reason why I'm hesitant on buying. I like Hersheys, but I always tell myself, own the store that sells the product instead of the product itself. So buy Costco or Kroger instead, for example. You own a store that is owning all the brands that are providing profit for the store that are proving to be products that are thriving. But of course, it goes deeper than that. But at a high level, owning one brand is riskier than a store that holds multiple brands. I don't know. That's just how I see it. I do think there is a movement towards healthier products, so this may hit Hersheys some, but this company will adapt no problem. I have full confidence in that. So their stock price target, they have an upside potential about 8.5%, and right now their stock is at about 192. If it goes below 175, that's probably where I would pick up some shares. So with Hersheys, it's a strong brand at a good price point and will be a company that I think will be around the rest of my life. But is there a better way to capture Hersheys through owning a company like Costco? Maybe. So let me know what you think of my 3 watch list stocks. Do you own any of these? Are these stocks you have been thinking of buying? Also, what are some of your watch list stocks? Let's get a conversation going so we can see what we're all kind of looking at as the market might be headed into a downtrend after kind of this bull market. But regardless, that is all for today. Thank you for joining, and we'll see you soon on Mark Arnold's Finance.